Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage market update. Now, mortgage bonds are a little bit all over the place. At the time of recording, mortgage bonds are down about 20 basis points. The 10-year yield is up about 5 basis points. And what this means is that mortgage rates are going to open about the same that they were at the time of close yesterday, or maybe a little worse. And we could see some potential repricing throughout the day. Now, the things that are putting pressure on the mortgage bonds is kind of twofold. There's an upward pressure and downward pressure that's kind of happening on the mortgage bonds. All right, number one, as geopolitical risks increase, the demand for treasuries from safe haven investing also increases. But what's kind of affecting this more and kind of a downward pressure is the fact that that same geopolitical risk is creating the cost of commodities to rise, and that's putting an inflationary pressure onto the bond. So you kind of have these upwards and downwards pressures that are happening on the bonds. It's making them very volatile, and that's part of the reason why we're seeing so many reprices really throughout the day, because it makes the market a little reactionary. So just a little bit of news on kind of why that's happening and how that's happening. In other news, today there's a 10-year note auction that's set to happen at 1 p.m. Eastern time. That could be a market mover. That's going to kind of show the demand and the appetite for treasuries right now. Also tomorrow, the CPI report is going to come out. That's an inflation report. One thing to note on the CPI report, though, is that it does not include any of the rising energy costs for the past few weeks. All right, so that information and that cost is going to start trickling into the report for next month, but it won't be reflected in the report tomorrow. And then lastly, news today, Mortgage Bankers Association released their new application data for last week, and new applications are up 9% week over week, which is good news. Purchase applications are up 9%. Refinance applications are up 9%. Now, purchase applications are down 7% year over year, but that's not as bad as what it could be. There's a little bit of headwinds coming in from purchase applications, rising rate environment, and things like that. So the fact that purchase applications are only down 7% year over year is pretty good news. Also, refinance applications are down 50% year over year, but they still make up 50% of new applications right now. So just kind of some interesting statistics there on new applications and refinances versus purchase. All right, that's all the news that we have right now. If we hear anything throughout the day, we'll be sure to let you know. Hope you have a great Wednesday, and we'll see you tomorrow.